Let's focus on our next management then. Sona BLW, that's the one that we're going to be looking at. We have with us Mr. Vivek Vikram Singh, the Managing Director and the Group CEO at the company. Hi, Mr. Singh. Good morning. Thanks a lot for joining in. Well, the stock started off a little in the red, but it's recovered from the lows. Before we get to the margins and other aspects, let's talk about the globe first. We have this entire tariff situation that's playing out. According to your analysis, how much of your business is at risk owing to these tariffs that have been announced close to a month ago?
Sure. Good morning, Nigel.
Morning.
The globe's still round, so it's still spinning. The world goes on. The tariffs bit, I think there was a recent relief announcement, which has been fairly positive for our customers because most of them are actually, almost all are domestic assemblers in the US. So it's been fairly positive. But I'll just break it down. We have about 40% exposure to the United States. 30 out of that 40 is direct to OEMs and 10 is to tier ones. Out of that 30, 20 is in HSN codes, which are actually not covered under auto HSN codes. So they are in reciprocal. So there is about 10% tariff right now. Let's see what the BTA negotiations and how they go. And if it goes positively, I think that's at pretty much no risk. The remaining 10% is pretty much done in the US for our US customers. So it's US to US. And there too, the impact is pretty much nothing. Now come to the last 10%. So we've done a line by line, program by program analysis. And what we've concluded that 70% of it is, I would say, places where it's very, very hard to replace us with anybody local. 3%, I would say, is what could be at risk in the worst case scenario of our total revenue. So that's where it's at as of today. Now, tonight, someone can announce something else and things can change. But as of today, this is where it stands.
You know, Vivek, I'm hoping for a good weekend. I hope he doesn't announce anything today. But let's focus on a couple of other aspects. You know, X of the PLI, actually the margins were a little lower than what the street was working with. The street has taken it in its stride because after opening up in the red, the stock has actually recovered. What is the margin guidance you can give us for this year? And also, if you could help us out with what kind of a rough revenue growth you're looking at. It appears for the time being, the risk of losing business will be low single digits. So we are to give an estimate as of now. If things change, then we won't hold you to this guidance, but otherwise a range on the revenue aspect as well as margins.
Yeah. So Nigel, in the last 4 years that you've been talking to me, I've never given guidance. So I'm not.
But nothing wrong in trying again, right? You could give us a range. I'm sure you'll want to give us a hint at least. Since you've given us a 3% number, I said maybe you'll want to give us a growth guidance number as well. Go for it.
No, growth guidance is something we have intentionally stayed away from. And right now, when signal to noise ratio is perhaps the lowest it's been in the last decade, it is a very bad precedence to set. So we won't give growth guidance. We will have growth, of course, because we've also added a new business, right? That starts from 1st June. The railway business starts getting added. So a lot of things to look at. And on 2nd May, to be honest, to figure out what the impact of tariff that are going to come into play on 3rd May is beyond my abilities.
Okay, got that. Vikram, hi, good morning. Prashant here. You said 3% of total revenues can be lost to lower cost suppliers in the worst case because of tariffs. That's your assessment.
Correct. And they're not really lower cost. They're lower because at one, they are not lower, but when it becomes 1.25 to our customers, of course, it becomes different. But see, in this scenario, right, the only people who can do it is people who have local capacity in the continental United States. Not anywhere else, because everyone else has the same problem. Actually, prices for our customers just went up by 25% for everybody. That's what they've done. For the HSN codes that are not covered in auto part list, they went up by 10%. So unless there is capacity and capability to do that part in United States, it is not possible to touch our business. And even that takes 12 to 18 months in our ability to shift.
And that 30%, 40% exposure to the US, you said 30% is to, so 30% it's the reciprocal part, not sector-specific tariffs, right?
So 30 is to OEMs. In that,
Right.
20 is reciprocal, 10 is non-reciprocal, but that 10 is where we are actually supplying within
Okay.
the United States to our United States customers. Second, this tariff relief actually, for most of our customers, the domestic value addition is greater than 80%. So if you look at the rebate for the next 2 years, they have to shell out pretty much nothing to cover all the cost of the extra import tariff.
Vivek, hi, morning. Just one final point on tariffs and this whole global situation. What is the mix right now? If I talk about the total revenue pie for Sona, how much is exports, how much is domestic, and what are you looking to maintain given all of this volatility and the shifting positions internationally?
So we don't segment by exports, we segment by end markets because we produce everywhere in the world. We have a plant in China, 2 in Mexico, 1 in the US, 7 in India. So it's 40% exposure to US, 30% to India, 24, 25 to Europe, and 5, 6, whatever the remainder to rest of Asia, China plus Southeast Asia.
Okay, so now just tell us, because you also have exposure to Europe, let's leave out US, which is the whole tariff situation, but your business to the US, is that taking any kind of a hit at all because of delays in decision making or sentiment shifting or OEMs being unsure about what they want to do in terms of expanding their supply lines?
Great question, Surabhi. So we have actually in an earnings call called that out, that although we don't know anything yet, because it's just April, right? April had no impact. We do think that there is a possibility that there will be general slowdown everywhere in every single market. And what that will be and how much, we don't know. Also, it will depend finally on what these tariffs settle at, right? So far, nothing has happened. But if this does happen, I mean, a global trade war would not be good for anybody. You cannot hide from it.
Yeah, no, absolutely. And I think that's the bigger one, right? The indirect impact, the slowdown, which will, I think, affect everybody. And that's absolutely impossible to quantify. Vikram, we're out of time, and I wanted to ask you about humanoid robots. That's the interesting stuff.
Yeah, that really caught our eye. But maybe just 10 seconds. What exactly are you looking to do there? A humanoid robot?
Okay, so I'll try to be very quick. Humanoids are where electric vehicles were in about 2015, 2016. That's when we started getting into electric vehicles. 50 to 60% of the BOM of a humanoid robot actually comes from parts that are well within our capability set.
BOM is bill of materials. 50 to 60% you can make. Yeah, basically.
Yeah, so gears, actuators, motors, these are the things we make. Prashant, anything that moves needs a motor, it needs a gear system, and it needs some sensors. So you can theoretically go into everything that moves.
We will have you back on. We will have you back on.
Yeah, this sounds
I think these are a very, very interesting space. I mean, and there's a lot to talk about here. Thank you very much for joining us with that perspective, and great to get that.